Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, October 23rd, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice here the ES pulled back yesterday afternoon following basically the NQ, as the NQ kind of led lower throughout the day. The ES eventually pushed back into the end of the day lower, but for the most part stays within a very clear trading range here over the last 6 to 7 days. So you have these 5 days plus some of this day here, some of today, and you have this very narrow range now. And if you look down here on a 6-day basis, we are completely compressed. 40% of normal range here for against average. And so for the most part, we are compressed ahead of next week's FOMC. So next Wednesday, not today, next Wednesday, we have the 2-day FOMC meeting that culminates Wednesday with the Fed interest rate decision and the Fed statement. And that's going to be something that the market's waiting on. And again, it's very similar to what happened last time. You saw a rally into it, and then it went sideways into the event. We've seen a rally and sideways into it. It happened back here as well. And so we could be range bound for a while. Now the trajectory is still up. Price continues to honor the PIMA trigger zone, and if there's a failure to hold, say 29.80 for any long amount of time here, then perhaps we could rotate back down. So 29.80 is going to be the key level to watch in case there's a failure lower. But right now everything is still kind of pushing higher and remains within a very narrow range over the last 6 days. So we could be looking at expansion down the road, but this thing appears to be coiling ahead of the Fed. If we take a look here at the NQ, very similar price action. Both the ES and the NQ are up 0.08%. This one now 0.07%. You can see again very narrow price action here on a 6-day range basis, compressed. 59% of average. This one is holding the 7,800 level. That's the key level to watch right there, 7,800 in case of a failure. The trajectory is still up. There was an outside day down yesterday, but again, we're inside the PIMA trigger zone, which is sloping upwards. So again, this could be an opportunity for price to come right back up toward highs, but mainly stay within the range heading into next week. So we will see again, 7,800 is going to be the key level here. A failure there could open up more selling pressure. Holding that level could lead to another near-term bounce back toward recent highs. Taking a look now at crude oil, you'll see with crude oil, this one has been compressed significantly. It's coming into the 55s as resistance over the last couple of weeks, actually throughout the entire month. Look at this month. This is the month of October right now, and it is just this tiny little wedge pattern where it's compressed all the way toward the apex of that pattern. And for the most part, this is compression that is building energy for the next major expansive move. I've talked about the seasonality of crude oil. Beginning in October, or anytime in October, it begins a downward period that doesn't really culminate until the end of the year. And so right now, we already had a sharp top that happened a little earlier due to geopolitical events here in the news that sparked this gap up. It failed all the way back to 51s, and now we're compressing. So again, as I mentioned before, the expectation based on seasonality is for this thing to start trending lower over the next couple of months heading into the end of the year. But if we do break through 55s, that could be an opportunity to watch for rejection and perhaps pile into the downside on that type of rejection type of move. So overall, this market continues to be compressed, and it could be more of the same again heading into the FOMC. But once we do break out, say above 55 or below 52, 53, that could open up some movement here. All right, lastly, we'll take a look here at gold futures. This one looks almost identical to crude oil, compressing significantly in the month of October. This one also developing, or continues to develop, that large rounded type of pattern here. We have major LVN here at 1465. So 1465 to 1525 continues to be the major breakout levels, and we're right around 1495. So we're basically right in the middle, exactly in the middle of that zone. 30 handles down, 30 handles up, and that's your resistance and support. We could continue to trade in that range really for the next, couple of weeks even. But overall, the expectation is ahead of next Wednesday's FOMC. We could be going sideways in this range, and then once the Fed releases the decision, we get the move. So right now, compression in both the ES, or rather cold and crude. ES and NQ continue to trend quietly higher, but also within narrow ranges. And it appears the market is waiting for the Fed. All right, that is it for now. We'll see how this plays out the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.